Alright, so here are my trades for the week ending October 16. So pretty interesting week. So on Monday I opened 3 trades. When Amazon ran up a lot, I put in an exaggerated limit order at a 3600 strike on Amazon, a call spread. And there were only 10-point wide strikes, so I had to go for $2 on a 10-point wide strike. I did 1 contract. I think at the time Amazon was trading at around $34.50 when this order got filled. And Nvidia, I did something similar as well at a $5.85, $5.90 call spread. So 5-point wide, I collected $1. And then Zoom, I did a put spread. So on the bottom side, I did a $4.60, $4.55 when Zoom dropped to around $4.90. I collected $1 and it's 5-point wide. So really these 3 were my main trades. I also did an Amazon put spread on Wednesday when Amazon dropped hard and went to a 32.50 short strike. So I went with 32.50, 32.45 put spread, collected $1. So let's look at Nvidia. Obviously Wednesday and Thursday when the market dropped, Nvidia dropped. So on Thursday I ended up closing the trade for 6 cents. So it gives me 94-cent P&L net profit. So $94 gross profit and $81 net profit after commissions of $12.90. And then Amazon, I opened it for $2, closed it at 8 cents, closed it for 8 cents on Thursday when everything dropped. So that gives me $1.92 P&L. So $192 gross and after $12.90 of commissions, $179 net profit. Zoom was a good one. So collected $1 and then was able to close it on Thursday as well for 7 cents. So that gives me a net profit of $80 after the commissions of $12.90. So as you can see, I only did 1 contract this week because I'm more comfortable doing 1 contract in terms of risk for the trade. And I do plan on going more to expiry, not closing at 50%. I realized by doing a back test on my trades that I actually would have made way more if I just let my trades go to expiry as opposed to closing the profitable ones for 50%. I realized that I was not making as much from my profitable trades and closing my losing trades too early, not giving them a chance to actually become winners. So I'm trying to let my trades go to expiry as much as possible, but at some point I just have to close it for a few pennies. I don't necessarily want them to expire worthless because crazy things can happen after hours, and also even during market hours after 2 p.m. Eastern time, your broker can start liquidating certain options if they consider it dangerous for your account, if your account cannot afford being exercised or assigned. So this Amazon put spread here that I opened at 32.50, it was a good entry. I liked it. But the next day Amazon dropped a bit more and reached 32.80. So 30 points away. 30 points on Amazon is not that much for me. Not that safe. And then it went back up to 3300, 33.15. So I decided to just get out of the trade. I got out for 75 cents. So I got in for $1, got out for 75 cents. Didn't want to take the risk. There was only 2 days left and I didn't feel like I had enough time to manage this trade if it went against me. I don't know if I would have collected enough credit from the call spread if it went against me. Plus at 2 p.m. the broker will start liquidating it for sure because it's a big underlying. So I just didn't want the headache of it. So I ended up closing it. And then 30 minutes later, Amazon went higher. I could have closed it for about 40 cents. Would have been a better trade. And then on Friday, Amazon went higher and I could have closed it for pennies. So it would have been an even better trade if I held on till Friday. But I always tell myself, go to expiry, just wait, hold on. But I just couldn't for this one. And could have closed it on Friday for pennies. But I definitely would not let it go to expiry because if we look at the Amazon chart today, so Amazon took a ridiculous drop at the end. It actually reached a low of 31.60. So it completely breached my short strike of 32.50. It closed at 32.72 though, and after hours went to 32.65. So definitely closing my options before expiry, that's for sure, no matter what, even if they're out of the money. Just ridiculous how all day the trade is super profitable, as you can see, really far from 32.50, and then it just took a minute and it dropped to 31.64. Could have ruined my trade if I still had it open. Luckily, I had closed it the day before. Didn't get the best fill, but I closed it, whatever. So overall, I've got a net profit for the week of $368 US. I've got these two little trades here, $7 and $9. They're basically trades for next week, but I ended up closing them today just because I didn't feel good about them. I had a call spread that I opened today. So I opened a Zoom call spread at 600 because Zoom just keeps flying. Collected $2 out of a 10-point wide call spread. So it was a good entry. But then I realized I think it's possible for Zoom to reach 600. It's a crazy stock, just keeps flying. I don't like call spreads in general. So I decided to just get out of the trade the same day. I was able to get out for $1.80. So made a $20 gross profit, but after commissions of $12, I'm left with $7. So this trade, it's just me changing my mind. So I didn't expect to make a profit from it anyways. And this one as well, I had opened on Wednesday, but today I decided to just get out of it because I didn't like my fill. I didn't like my entry to begin with. And a good thing I did because SPY after hours is trading at 346. So this is probably worth over $1 right now. So I got out of it today for 48 cents, $22 gross profit. So $9 net profit after commission. So these two last trades, it's just me changing my mind, and I got lucky that I was able to get out of it for a small profit. This one was me being chicken again, and these ones went perfectly. I'm really happy with these ones. Only thing is, I wish I did more contracts, but of course I know I'm not ready to do more contracts. But what's good is if I have a consistent strategy, scaling is the easy part. I just need to do more contracts. My account size can afford more contracts, but my risk tolerance, my personal risk tolerance, my stress level does not afford more, cannot handle more contracts. But for example, just for fun, what if I was doing 5 contracts every time? I would have had a 2,000 net profit for the week. What if I did 2 contracts? Would have had a net profit of 796. And finally, what if I did 10 contracts? 10 contracts would be my max. I don't see myself ever doing more than 10 contracts. I would have had a net profit of $4,220. So what matters to me first is getting a lot of winners. And then after that, once I'm consistently getting winners, then I could easily just scale it up by adding more contracts. That's the beauty of these options trades. So I still have my naked put on Rakuten at a 22 strike expiring November 20th. This week I had the chance to close it for a decent profit, but I'm going to hold on to it. I'm not worried about it because I can always keep rolling it. That's the advantage of a naked put. You can always roll for a credit. So I'm not worried about it. This one has no stress. I've got a SPY put spread that got opened after hours. Actually, it got opened after 4 o'clock because ETFs on the indices can be traded till 4:15. So SPY, IWM, and Qs, for example, DIA, you can trade the options until 4:15 p.m. So I had an order for 80 cents at a 340, 335 put spread for Friday, October 23rd. So for next Friday. And it actually got filled towards the end around 4:14 just because the market dropped after hours like crazy. I also have an order on Netflix, a put spread at 485, 480. Collected $1, 5-point wide for next Friday, but Netflix has earnings, so this one might be a little bit hard to close before Friday. I think I'll only be able to close it after earnings, or if Netflix goes up a lot before Friday. I think earnings on Netflix is Thursday after hours. And I've got a put spread on Shopify at 10:20, 10:15. Collected 95 cents. I actually could have gotten a better entry. I had a 10:15, 10:10 put spread at an order asking for $1. But I really wanted to get into the trade, so I decided to change it, bring it higher to 10:20 and ask for less to get filled right away, which I did. And if I had just waited an extra 2 or 3 minutes, my original order would have gotten filled. It was at 10:15, 10:10 put spread. So it would have been safer. I would have collected a little bit more. But whatever, this is a trade that I have on right now for next Friday. So next week I plan on playing anything that drops hard and that has high implied volatility. I'll do a put spread, 1 contract, 5-point wide, and I do plan on playing Tesla earnings for sure. So if you have any questions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, check out the other referral links in the description below the video. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.